What's going on, everyone? In today's video we're going to be looking at Warren Buffett's opinion on index funds. Now, to illustrate this point, I've brought up one of his old interviews where he discusses his beliefs surrounding index funds. For those of you who don't know who Warren Buffett is, he's considered to be one of the greatest value investors of all time. He's got a net worth of around $72 billion at this point in time. He's one of the richest people in the world, and he's the CEO and chairman of a company called Berkshire Hathaway, which in 2018 had a revenue of $238 billion. So he's definitely someone worthwhile to listen to, who's got a lot of insight and knowledge when it comes to the stock market.
So this time I went back actually to 1942 when I bought my first stock as an illustration of all the things that have happened since 1942. We've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars. We had 9/11. We had the Cuban Missile Crisis. We have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore. Just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amounted to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776, and that American business, if America moved forward, American business would move forward. You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be. And America worked.
So the principle that makes investing within index funds and having long-term perspective with your sort of stock market returns that you're making is that when you say invest $10,000 within an index fund, the average annual market return is roughly 7%. So once you would put that first $10,000 in, after that first year, the 7% return will come along, and then you'll be left with $10,700. And then in the second year following that, that money that you've built up, that's gone from $10,000 to $10,700, that will again have another 7% return if you're going with that market average. So your $10,700 will go into $11,449. And then in the third year, that $11,449 will then again gain 7% return. And then this trend continues exponentially. And in the short term, say, 1 to 3 years or so, it's not really anything spectacular. But when you're looking at it from, say, 10 years onwards, you can have a very large increase in the sum of money, even without adding anything to it over time. And as clearly illustrated in the interview, that initial $10,000 investment can increase exponentially, into the millions if you leave it long enough. That wraps it up for the video. If you'd like to see more future stock market or investing related content, feel free to subscribe for the channel.